So tell me again about the part of your homeowner's insurance policy that didn't cover what you thought it might cover. This is Ron Wojciechowski for the Black Hole of Real Estate. And it's a stark reality for many people that have to make a claim on their insurance to find out that something they thought was covered wasn't actually covered. And the obvious things come to mind as we get a little closer to hurricane season is that wind can do damage, especially hurricanes, right? Can do damage, but also floods and the water that comes after. Maybe it's just a heavy tropical storm or a prolonged rainstorm. So the obvious things, like if it's a really bad hurricane, like there's good ones, and bad things happen to the roof, it's just got to come off. Most policies in Florida are going to have a hurricane deductible, and let's say it's 2%. So if you had a $400,000 home, but you insured it for like $300,000, then maybe the first $6,000, 2% of $300,000, $6,000, that's going to be your deductible. So if the roof costs 20 grand, you take out the 6, they give you 14, and then you just pay the difference to the roofer. So that I think most people are somewhat familiar with. Now, let's just suppose that it also dumps a lot of rain during that time and your house unfortunately floods. Now, depending on how that all plays out, if you got flood insurance, you probably got some coverage. And if it's a named storm, then you may have some coverage. But if it's just a flash flood or a storm that comes out of these microbursts, it just comes out of nowhere and it doesn't have a name to it, you may not have a roof claim, you may not have a flood claim. But keep in mind, like even if you have flood insurance, what exactly does that cover? Well, it may cover the damage of the named storm and the event of the flood, but it may not replace wall hangings and fixtures, and may or may not replace maybe the kitchen cabinets, but not the granite countertops. There's any number of things that can be covered and not covered. And again, I don't want to, you can examine your policy, you can deal with the adjuster. I'm not here to have that whole conversation, but here's where it gets a little bit tricky. Let's say that you're in an area, whether or not it's a flood zone, and you don't have flood insurance, and then water intrusion comes in and your house fills up with water. You're probably not going to have any sort of way to make a claim on that, because if it's not a named storm and you don't have flood insurance and the water, it just happens to happen, I'm sorry for you. But that was part of the risk of the insurance. You see, insurance is really just risk management. And you're assigning some risk to the insurance company by paying a premium, the money you pay every year to them. And let's suppose you pay $2,000 a year every year for 30 years, overall $60,000. You're paying a couple thousand a year so that you don't have to pay for catastrophic damage that might cost you 50 or 100. So you're betting, you're wagering that I'll give you $2,000 in case something really, really bad happens. If not, I just eat the $2,000. And by the way, it's a lot like your car insurance, right? Sounding familiar right now. So a couple things we want to just refresh and remind about right now. There are hurricane deductibles. There are named storms. There's water intrusion. There's floods. You may or may not be in a flood zone. And some of the things that happen to your home may or may not be covered. And you could have to pay some money out of pocket, or maybe even a lot of money out of pocket. And most policies, if you really read into them, they don't have written into them things like lost rent or expenses to move out of your home to live someplace else where your home gets fixed, which can be months and months of cash out of pocket. You might have a mortgage payment to make, a rental payment to make, extra repairs to be made that are outside the scope of the insurance claim. Well, the list could go on and on. And if you have a rental property, well, now there's just lost rent, and there's additional things. So when you make a claim on the insurance, then you've got to disclose it somewhere down the road when you eventually sell it. So there's a lot really to examine with this. And the first place to start is to talk to a reputable insurance company and talk to an agent who is going to have your interests in mind as you select the correct policy to manage the risk that you want to pay some money towards that insurance company so that you can lower the cash outlay if something really, really bad happens. That's insurance. So I hope that gives you a little bit more to think about when you're purchasing property and purchasing the right insurance policy. This is Ron Wojciechowski for the Black Hole of Real Estate.